a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about IPOs and the IPO market. And IPO market has been hot lately. It has been rebounding because investors have been piling into riskier areas of the market. And that's because the economy has remained resilient and there have been positive developments on the trade front, and the Fed is preparing to start cutting interest rates soon. So everything looks positive for riskier areas, including IPOs. Now, remember, IPOs had boomed in 2020 and 2021. And at that time, interest rates were ultra low and liquidity was abundant. And then the Fed started raising rates, so the market crashed, and that was followed by hibernation for the IPO activity for a couple of years. Now, this year, some very hot IPOs have made their debut, and particularly in the AI and crypto space, some of them saw huge first day debut as well, big first day pops, and then some of them were not able to sustain those pops. And remember, retail investors do not benefit from the first day pop. So, uh, software firm Figma, it had more than tripled in its debut. And then Circle, which is a stable coin issuer, that had more than doubled. Bullish was up more than 80%. And let's look at the performance since then. So now these are the best performing and on the hottest IPOs of the year. And after that initial pop and drop, now CoreWeave is up about 134% since its debut. Circle is up 86%. Carmen Holding, which is a space company, that is up about 78%. Then Figma is, after its first day surge, uh, Figma is, which is a software firm, now it is down 14%. And Bullish, which is a digital asset exchange, it is down 30% since its debut. So obviously, these jumping into these newly listed company doesn't make much sense for most investors, because we also know that and okay before that, I also wanted to talk about some of the upcoming IPOs, highly anticipated IPOs. So among these, we could have crypto exchange Gemini, which is owned by the Winklevoss brothers. Then the payment firm Klarna Group, and the ticket broker StubHub Holdings. And the Trump administration is also reportedly planning an IPO for Fannie Mae and Freddie Mac. And if those two go public, that could be the biggest IPO on record. And talking about the IPO activity, I also wanted to show a chart by Renaissance, which is an IPO expert. So you will see that this year, according to their data, 138 IPOs have been priced, which is up about 59% from the same date last year. You see this huge activity in 2020 and 2021, followed by freezing of the market for a few years. Now, as I mentioned, that these new companies can be very risky. Investors should remember that not all IPOs are successful. These are small, lesser known companies, and some of these will be quite successful, and some of others could lead to significant losses. Now, I should also add that the most valuable private companies, OpenAI and SpaceX, they are not expected to make their public debut anytime soon. Uh, Now, Trading can also be very volatile, as I saw, as you can see from these performance numbers. So, as these companies they make their debut, then for the few months trading is volatile, and then as analysts and investors learn more about them, then trading stabilizes. So an ETF approach can reduce risks through diversification, and while allowing investors to participate in a diverse group of larger and more liquid IPOs. And another benefit of investing in IPO ETFs is that they could provide exposure to newly public companies before they are added to major US equity indexes. So those major indexes like the S&P 500, they typically include these new companies only after a seasoning period. For example, Google and Meta were added to the S&P 500 after about 2 years of their IPOs. Tesla had to wait for almost 10 years after going public. So let's take a look at two IPO ETFs that investors could use. So the Renaissance IPO ETF has a ticker symbol IPO, so it is easy to remember. It holds the largest and most liquid US IPOs, then holds them for 3 years, follows a market cap weighting scheme with a 10% cap, and this has 162 million in assets and charges an expense ratio of 60 basis points. So let's go to the quote page on Zacks.com. You can read our research report articles. Then, using the link, you can go to Renaissance webpage for this ETF and learn more about this ETF. And you will see that current holdings are Reddit almost 15%, then Astera Lab, Kenvue, ARM Holdings, and Viking Holdings. And as I mentioned earlier, these are held for 3 years and then sold. Now, the second ETF, which I'm highlighting, it's by First Trust. The ticker symbol is FPX. Now, the difference is that this also includes spin-offs, IPOs as well as spin-offs. So 100 largest, most liquid, best performing IPOs, including spin-offs. And this holds for about 4 years, whereas IPO ETF holds new IPOs for about 3 years. Similar expense ratio, this is larger, 1 billion in AUM. Now, let's take a look at the ETF. Again, you can use the link on Zacks.com to go to the web page. And if you look at the holdings, you will see these look quite different. GE Vernova is a spin-off, and that accounts for about 10% of the portfolio. And then you see Palantir Technologies, AppLovin, DoorDash, etc. Now, these are some of the high-flying stocks lately, and that has resulted in better performance of the CTF versus the IPO ETF. Now, one thing you should note that Palantir actually IPO'd in September 2020. So maybe this will go out during the next rebalancing. AppLovin April 2021, and then Robinhood Markets, which is also a high flyer, and that went public on in July 2021. So it's possible that some of these top holdings and best performing holdings could leave the ETF sometime soon. Now, on the next slide, I have the year-to-date performance of these two ETFs versus the S&P 500 index. And as you saw, the holdings, because of some of those top performing stocks being the top holdings in the FPX ETF, that ETF is up a little more than 25% year to date, whereas the IPO ETF by Renaissance, that is up about 14%. The S&P 500 index is up about 11% during this period. I also looked at the 5-year performance of these ETFs, and again, the First Trust ETF outperformed, but both these ETFs significantly underperformed the S&P 500 index. You will see that they were surging in 2020 and 2021. There was a lot of hype, and then that was followed by a period of hibernation in the IPO market. And if you look at the 5-year performance overall, the S&P 500 index is up about 105%. The First Trust ETF is up about 64%, whereas the Renaissance ETF IPO is up about 10% over the past 5 years. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer. Make sure to subscribe to our YouTube video channel so that you do not miss anything, and I'll see you next week.